presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Ben in San Jose. Ben, what's going on, brother?
Hey, Tom, how you doing, man?
I'm doing great, man. Yourself?
I just wanted to thank you and your team and everything. I've been using your technique with the 10-minute charts, watching the VIX, and just making a fortune here on the futures.
Isn't it interesting? That's awesome, man.
It's wonderful. Thanks, Tom. I appreciate it.
Okay, man. Have a great one. Have a safe one.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup filling in for Tom O'Brien. He will be back tomorrow. We have quite a stormy day out there. So if you're in the area, make sure you're staying in. Just be safe and all that. Let's take a look at what we got going on in the markets right now. We have the ES Mini trading flat right now, about 47.90. We have the Russell Futures trading about 19.86. Again, down just about 0.87%. NQ's flat, 16.820. Looking at the Dow Futures, trading at 37,723. Kind of a flat market out there today. Gold's not done too much. We're all kind of hinging on the dollar here. It looks like the dollar kind of wants to retest the 103 again, getting a little bounce going. Let me get off the 3-year chart here. Let's go to year-to-date. That's not good either. We're seeing a little bounce on the dollar. Might see it travel back up to about 103.25 area. Of course, with an increasing dollar, you're going to get some downward pressures on the market as a whole, but it looks like the markets are holding all right currently. Q's trading at 405.30. Google at 141.90, Meta 358.20, Disney down a little bit at 89.73, down almost about 2%. That equity is struggling quite a bit. Apple trading at 184.48, and of course the SPY at 473. Take a look at the silver contract, trading about 23.14, and of course copper. We are actually down a little bit. We were trading up in the 380 area, actually going close to $4 on that contract. Trading down about 1.27% right now. That's about $3.76 on the contract. You know, I've been talking about copper a lot when I fill in for Tom, and probably without graphics, it seems a little bit nebulous, like I'm just kind of talking, but this right here is from the IEA, all right? So this is kind of looking forward to the certain kind of minerals and what's going to be needed as we make this kind of global transition into what we're calling green technologies, right? So this is going to be in batteries, such, you know, for EVs, for storage in general. Of course, they're also looking at different ways of generating energy, which is going to be, you know, something like offshore wind, onshore wind, and we'll talk about this a little bit. Take a look here. This teal color is really what we're looking at on these charts, and this is going to be for copper. Okay, and we can discuss some other things, kind of like zinc and chromium going forward here, especially if we start to lean a little bit more into nuclear. I know uranium has had quite a nice time. We're going to have Basil on next segment, and I'm sure he'll talk a little bit about that. If he doesn't, I will ask him. But we see this conventional cars compared to electric cars, how much copper is really needed, right? Of course, copper and graphite are going to be massive. The thing with copper is we're not producing enough of it on a global scale, right? So until we have some kind of really concerted effort, I would say, into mining more of it, you're going to kind of get this choke, essentially, right? Where demand is going to go up, you know, by 2035, you're going to see, give me 1 second to mute this. You're going to see the demand for these increase, and that's just for EVs, about half, right? And that's by 2035. So the amount of copper we're going to need to be pulling out of the ground is massive. You're seeing that with Barrick, who's looking to buy one of the largest copper mines in the world, and they're on that, right? And you're seeing a lot of other gold miners start to try to transition and adding some kind of copper into their portfolio. A lot of larger private equity firms are adding copper in as well. It's somewhat inflation resistant, but going forward, I think this is massive. Looking into things, you know, let's say we go the nuclear route. I think we see a lot of money being put in, you know, and this is going to be for generating energy this time, not just for storing it, in wind, right? Now, there's a lot of, I would suppose, controversy over wind turbines, right? They're massive. They require a ton of minerals to go into it. And there's some argument that they kind of screw with the bird populations, which, you know, is something serious that we need to look into. But let's say we transition into nuclear, right, which I do think going forward, let's say in the next decade, that conversation is going to go up. We're looking at things like chromium. Now, a little bit later in the show, we can take a look at any contracts with that. It's not a big thing right now. Of course, chromium is relatively expensive for this, but it's still relatively unique. You can see in electric cars, we're not even using chromium whatsoever, and in conventional cars, it's non-existent. But I think the idea here is as we're really transitioning into kind of this new economy, right? And we'll talk a little bit about a paper that I have here that's kind of looking at the potential impact of AI. And the reason why I bring that up right now is this is kind of like a brave new world, right? I mean, we're hitting some certain singularity point where I do think that the global economy is going to change vastly and rapidly, and the materials required to sustain that and really push it forward are going to be a little bit different than the ones in the past. So I think the idea of kind of building, some portfolio for the future around what's going to really be necessary. I mean, obviously, right? I mean, that's kind of common sense. But I think sometimes it's positive to kind of slow down and kind of take a look at what that might be. And so, I think copper is a really beautiful concept. We'll talk a little bit more about that too as time goes on. I want to take a look at Steel Dynamics because they got crushed today. They're about 113, down about 3%. Of course, we had that high right there about 128.60 and coming right back down. I see kind of a testing of the last day with volume. We did blow through that already, but on lighter volume, so we might get a small bounce on it. I'm waiting to see a new kind of trading trend go with this. Steel's still looking great overall in the market. I think Nucor was down a little bit. Steel Dynamics has been underperforming for the past month at least. But they do have earnings out on 28th of this month. So we'll have to kind of wait to see what's going on. They have a relatively high PE for their industry themselves. I think they're trading about like 11.8 or something like that forward PE. So, fundamentally, that can be somewhat of an issue. They might have a less than stellar quarterly report. We'll just have to wait on 28th to see. You can see this big dump down. I mean, it's not on really any significant volume compared to what it usually trades with. So I do probably see a bounce coming up in the next week for Steel Dynamics until we kind of figure out a more consistent trading range. And I mean, it's a great company. Steel is always going to be in demand. We have the Inflation Reduction Act, again, from the Biden administration that is pouring a bunch of money essentially into building new infrastructure and updating all this kind of stuff. I also think, too, once you're going to start seeing rates come down, again, we can talk a little bit about that, too, what the Fed has said recently regarding that. Eventually, when they do come down, steel will be in greater demand as well as buildings kind of resume. We'll talk a little bit. We just got about 40 seconds to the break here. TikTok, and we'll talk a little. Oh, excuse me. That's not what I wanted to talk about. Well, folks, stay tuned. We'll be right back. I wanted to get the actual story I wanted to talk about.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kakestat's Tiger Forex Report. Teddy Kakestat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. Before we go on here, I want to take a look here at TFNN.com. We can go over here to newsletters. Now, this is the opening call, folks. Okay, and Basil just came out with a webinar at the end of last month. This is sectors and stocks just coming off major lows from 2023, ready for even more upside action. This is the best way to kind of start your year trading. Figure out what you want to do with your portfolio. If you're just starting trading, right, you've been following us, kind of just trying to get some more information of what we're doing, I would really recommend subscribing to the opening call newsletter from Basil Chapman, okay? This is a 30-day money-back guarantee. If it's your first time, you got nothing to risk here, all right? You get access to all of his old webinars. These things run, you know, like right here we have one from 90 minutes. We have one for 2 hours. I mean, these are really worth it, guys. If you have not checked them out yet, I really recommend. And I believe we have Basil on the phone right now. Basil, can you hear me?
You certainly have me on the phone, and actually I have me on the mic, but
there you go.
Good to speak with you, and a happy new year, and you're doing a great job. Yeah, I can't believe how much you've added to TFNN. Came in as a novice, and you are superb, doing fabulous work.
Thank you so much, Basil, and really listening to all you guys online has just really helped a lot. So I really appreciate that, and Happy New Year. How's the weather over in the New England? I heard you guys got some interesting weather coming to you.
We did have it depends where you were in Massachusetts. Western Mass got blasted with about 12 inches. But we only got about 2-3 inches, and it was soft, and it kind of went away at least in the streets, where the sidewalks are still quite snowy. Yeah.
There you go. Yeah. We're getting some tough winds here tonight, so.
Oh, yeah. Oh, okay. Well, good luck.
Well, Basil, what are we looking at today?
So I thought I'd just give a little overview here. So we actually are short the Dow. Okay. But in the long term, we have positions that go back to March. Long-term positions go back to March of 2020. We also have the diamonds, and we have the diamonds plus the 3 times long. You shouldn't have that, but we've kept it all the way from October of this past year from the lows. But within that, just this choppiness just says to me that there's a really good chance we've got, at best, a sideways upper level consolidation. And you can see by this daily chart here of the Dow, this rectangle. But when I look at this weekly chart, this is a single leg from the October 27th low. That was the 27th of October, where the Dow was at 32,327 and all the other indexes were at their lows. This move went 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks with higher highs. That means I call, in the Chapman methodology, I call this a floating letter until it makes a peak. Well, technically, I could consider it a peak F, meaning, whoa, you've got to be careful here. But the strength of the technicals and the weekly are so strong that I have to call it a possible new leg A, maybe even a peak A if we don't make a new recovery high this week. And that just says to me, on the short term, we might have some volatility. But so far, unless there's really bad news, and we haven't had, the yields are still more at their lows than the highs. Copper, you mentioned copper. Copper's been weak, but in fact, there are a lot of things. For instance, gold is part of an inflationary look at the markets, and that's not going anywhere. I have to tell you that all the things that would be very negative on the short term, I see little smatterings of that. So I have a position, this is for subscribers, and this is, I would call it a hedge more than an actual directional move until this 9-period moving average, this green line, let me just put it on this chart right here, until this green line starts to go pink by going under the 14, the 9-period goes under the 14-period moving average. We have been in this green line since the 3rd of November. And that green line is the 9-period moving average, and it's just been, I call this the indicator of last resort. All the other indicators could be failing. As long as this remains positive, it means that there's internal strength. So I am anticipating that we do get some kind of a pullback over that the weekly chart that I showed you, the spectacular move up, actually does make a peak this week with a lower high than last week. And then we'll look at to see how we have a digestive phase. So within that context, my question was, on August the 1st, we actually went short the Dow on a shorter term basis. And that was right then. I said, we're going to have to wait for that 9-period moving average to cross negative. Eventually it did. Then, of course, we tumbled down to the 32,000s. I don't see this quite the same at this point. I see a lot of support levels between 37,000 in the Dow and 36,500. But I do see very similar action here with this little double top like we had over there. So I'm watching it very closely because it's a good sign when you have Boeing tanking. Yes, not that it's a good sign for Boeing. I'm just saying that Boeing was sharply lower, and yet the Dow managed a really strong move up yesterday. Yeah. And so now you've got a few more Dow stocks that are weakening, and that just says to me we've got to be a bit careful. But I heard you speaking a little while ago about uranium. Yes. And I thought, that is interesting because we have a uranium stock, UEC is the symbol. This is called Uranium Energy Corporation. And I said to subscribers, every year, we not every single year, but a lot of the years that we've had over the last 5-6 years, we've had some kind of single-digit stock or very low-price stock that just seemed to find its niche. And if you look at the way this Uranium Energy Corporation, it went to a new recovery high. It's not an all-time high. That goes all the way back to 2010. Where it hit 748. But in the interim, it's been all the way down to a low that was made March of 2020 at 35 cents. And now it's trading at 6.80. And you can look at this cup formation. And all the technicals are still very strong. And I say to subscribers, this could very well be one of those situations where under all the conditions that should take this particular stock down, it defies gravity and it keeps holding well. And look at this weekly chart, how it's walking this green 9-period moving average, which is way above the 14. So uranium, I think, is telling, if you go to the uranium URNM, the uranium ETF, this is a Sprott uranium minus ETF, very strong move today. It was not acting, the chart didn't look quite as good as the UEC, but now it's acting very well. And if it takes out the high that was made, look at this. If it takes out the high that was made on the week of the 8th of December, which is at 50.55, if it just goes to 50.56, that breaks out, and that becomes a new leg C in the weekly chart and extends the leg C in the monthly and says, wow, there's a chance that we could go, we could start to go into the 55 area over the next month or so. So this market is so diverse, it's so bifurcated that if you're in the wrong area, you're just wondering what everybody's talking about when they say things are looking very good. And if you're in the right area, you just say, wow, that's fantastic. Very diverse action, yes.
Absolutely. And Basil, stay right there, because I want to pick your brain a little bit more on uranium. When I saw that you had picked that in the newsletter, I was so hyped, because I just think there's so much potential for that commodity. But Basil, please stay right there. We'll be right back.
Sure.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. I am with Basil Chapman right now. Before we went to the break, Basil, we're talking a little bit about uranium and how you're looking at it. Well, I want to say, too, on some fundamental stuff as well, the DOE has issued requests to get basically some test uranium, right? They want to enrich from 5% up to 20%, so this is really big, and a lot of these uranium guys are taking off. So just wanted to put that in there because I thought it was good information as well.
I like the way you tied the fundamentals to the technicals, because if the fundamentals are improving or strong or weak, that in fact does impact the chart's potential.
Sure, absolutely.
So in this particular instance, the reason why I kept saying I love the way the uranium, especially the UEC stock that we have, they're acting very, very well. But most importantly, it's as if they've ignored the marketplace, the overall market, that is the stock market. They're in their own niche at this particular point. And I think that that's really important. For instance, we have Microsoft from the 338 level. We've had very nice trades in between. But once it goes sideways, there's a pattern that I call the lowercase h. In other words, you come down, then you make an arch formation, you hold the left side low, and then you make another H. And that can go on for a little while. That's like a rectangle formation just going sideways. So that could be considered a consolidation. On a purely technical level, AI has been talked about for months, almost all year through 2023. And yet when you look at the AIQ, we actually long the AIQ, which is the Global X Artificial Intelligence ETF. I don't think it's done so fantastically. From the talk, if you had a Google search for the word or the two letters AI, I mean, you would see the volume. It would be out of this world. I can't even imagine how many times it would have been mentioned. Therefore, you would think appropriately that whatever you're following should have that kind of demand. But I must tell you, and Microsoft's telling me that the whole thing with AI, just in the shorter term, this is a rest period, a digestive phase. So that's what I'm saying. This rotation through the different sectors is really fascinating and important.
Yeah, what a great thing to tie in as well, right? Like you're finding these stocks that are being resistant towards the greater move, and that's through these technicals, and that's what's what's so valuable about the Chapman wave and all the technicals as well, as long as they're done properly by good practitioners and technicians. That's phenomenal. That's phenomenal stuff. Yeah.
So here's another thing. I thought I was listening to you a little earlier. You had mentioned Steel Dynamics.
Yes.
Steel Dynamics is a stock I followed for years. I don't think we've ever owned it, but for some reason, there's a reason why it used to be that way, and it kind of remained that way in the last 2 years. You can see this monthly chart. You see the way it moves up magnificently, but then it has a pretty serious decline.
Yes.
And then it goes straight up. And then it takes its time as a big. So it's the declines that kind of worry me. It's not that, if you got it down this particular, sometimes we get a stock down the lows. I'm prepared to try to survive the vicissitudes of all the the selling waves. But in this case, it would be tough if you got in at any point on the upside move.
I know. And
you weren't prepared for the downside. And yet here it is making it makes higher highs and higher lows. That's a pretty good looking chart in the shorter term. Here's your peak E, and it's pulled back, making this inverted V-shaped pattern. So it's just taking a digestive phase. But I like to always talk about the steel stocks. And you had mentioned steel stocks. Look, the steel stocks, the Van Eck Vector Steel ETF, look at this beautiful, I call this the inside track. Here's a monthly chart on the right. You see the little green line and a little tiny little channel, pink line. That's what I call the Chapman wave inside track repellent zone. Once it breaks above it, it becomes the support level and becomes a propellant. And look at the way every time for the last a year, yes, exactly a year, every time it's got close to this pink line, it pulls back. But it is making higher highs and higher lows. And I think that's really telling me that the economy, because you cannot have steel stocks moving up if the economy, the sub-economy hasn't been doing quite well.
Sure.
So when I look at it this way, I think that this fits exactly the scenario I'm thinking we're in right now, a digestive phase after a really spectacular November and December. You need a breather. It's just important to take a breath, get ready for the next big move, and that's kind of I think where we are.
Yeah, absolutely. And even with Steel Dynamics, you kind of bring up a fear I have with it, right? And I focus just mainly on Steel Dynamics because I traded it for so long and I got to kind of understand how it worked. But you had a pretty significant trading range from about 100 up to 110, and it was so predictable, right? As you're even saying, you get these high highs. If you buy it on that movement up, and you don't, as you say, you can't have like the kind of strength to hold it on the way down, you would see this constant movement. But then we had this breakthrough at the 100 level, which was really support for that stock for quite a while.
That was very good action. Yes.
Yes, but what was so interesting, and it broke down that support level on quite significant volume, like for what it usually traded at, and that was a little bit strange to me. And I had thought that this was a surefire thing that we were setting up for lower prices, but it completely, it kind of defied that, I would suppose, right? And as you're saying, you're really seeing that. You get a nice run up, a pullback, and then a run up again to higher highs. And I think that's what's so appealing, at least, currently with this stock. So
you had mentioned earlier that my last webinar, and it's actually a viable webinar. I said this is not an exact timing type webinar. I want this as an educational one.
Yes.
And I said what we are looking for are what are the areas, the laggards, the stocks and the ETFs that were really poor going into the lows of 2023. Are they coming through? Are they about to start a new move up and to become leaders for the first quarter of 2024? So for my newsletter, we're trying to find those sectors and stocks and ETFs that really kind of they were very poor. They're off everyone's radar. This is when I like to get them.
I love it.
And if we're able to get them kind of at the lows, it gives you leeway on the upside when you get those, as I call them, the vicissitude, those down moves that suddenly come about. If you get them right, it means you can survive that kind of decline. And as long as they're moving to higher highs and higher lows. So this is a very important period. I think people should not be afraid. Get your little kitty ready. Get your stock list, the stocks that maybe you missed on the way up before. And you say, when they come back down, these are fabulous companies. That's the reason why we got Microsoft, because it's just an incredible company. We were able to get it near the lows. And now we've got that room to say, well, we've got a little leeway. If it does this digestive phase, that's fine. But it's important to be able to identify, if you can, the ones that were terrible losers that could become, at least in the intermediate term, better stocks or better leading stocks in this particular instance, so that if the market does pull back, as I anticipate on the shorter term, we'll see what happens. And the semiconductors are probably going to be the big clue here. We'll see what happens with them.
Yeah, I love the thesis behind that. Basil, thank you so much for joining me and having this conversation. It's always a pleasure, seriously. I really appreciate it.
Thank you, Jacob.
Take care, Basil.
It's always a pleasure to listen to you. Thank you.
And remember, folks, go right here, TFNN.com, newsletters, the opening call by Basil Chapman, 30-day money-back guarantee on the first time you subscribe. Folks, stay tuned. We will be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. Just got off the phone with Basil Chapman. That was a pretty good interview. If you missed it, check the archive at the end of the day. Let's take a look at oil real quick, up 8.7%. This is kind of unexpected, I would suppose, right? So this is the natural gas ETF here. You had a nice pull down. There was just so much supply of the natural gas. It was just, this is kind of what led to this pull down in it. Of course, you had this massive volume uptick, about 8.7%. You know, there's been some conversation. This was an overnight thing virtually, right? And there's this conversation, obviously, that the winter this year might be mild. However, you're getting massive cold fronts coming in New England, especially in kind of more interior states as well, like around Illinois. The supply will be cut down, obviously, from that, but you also had a record year for Chinese output of natural gas. So it's be interesting to see what kind of happens with oil. This is like a long-term thing. This is like short covering, whatever it may be. But I heard some people talk about that a little bit in the den. Again, if you were not in the den, this is our Discord server. We have over 600 people in it. We have a bunch active every day. This is constant insights. You know, you're getting people, you know, you're getting traders like Basil Chapman in there just throughout the day, kind of putting his 2 pence in, which is obviously extraordinarily valuable. This is a $1 a year service. We just do that so we know who's in the den. And we do that for security reasons, okay? So it's all good. Got that set up again, just $1 a year. Come on in. Send your username to me afterwards at sales@tfnn.com or jacob@tfnn.com, and we'll get you in. It's pretty fantastic. All right, let's take a look at Meta. We have some stuff going on with it and some potential issues of surprise with the EU Commission regarding OpenAI and some mergers. All right, so let's take a look here. Didn't expect that, did you? So let's take a look at some of the key points. European Commission, the executive arm of the EU, said it's embarking on a competition probe in virtual worlds and generative artificial intelligence. As part of the probe, the Commission is looking into agreements made between tech giants and generative AI makers, and the Commission singled out the Microsoft OpenAI partnership, as a deal it's considering launching a merger investigation to. They love doing that to poor Microsoft. I say poor, but the multi-billion-dollar investment in artificial intelligence from OpenAI could face a full-blown merger investigation in the EU. As part of its assessment, the Commission said it wants to understand how competitive these markets currently are and gain insight on how competition law can help these fields. So that's a super interesting problem, I think, that's going to happen with AI, because these, you know, there are a lot of artificial intelligence companies, right? As far as things like generative AI are concerned, I think the investment into it is so massive. That's kind of needed. You know, let's look at like chips, right? They're using NVIDIA chips to essentially teach a lot of these AIs, and then they use AMD to kind of maintain it. That's kind of how that structure works. But, you know, when you have these large companies like Google and Microsoft and, you know, Meta to some extent, and Snap, you know, Snap's falling behind actually quite significantly with their generative AI, and I would argue it's not even really that good of a generative AI. But you're going to have problems, and you're going to have these competition issues. I think the barrier to entry to it is massive, right? So talk a little bit about this here. Microsoft has put billions of dollars into OpenAI, the firm behind the popular AI chatbot ChatGPT. The company has integrated some OpenAI technology into its Office, Bing, and Windows products, and provides OpenAI with its own Azure cloud computing tools. And this is really the massive thing when they're adding that into Azure. It's so interesting because Azure itself this is like their cloud management. Azure is the cloud, and then obviously technicians in Azure. That's a very it's a high-paying job, right? I mean, if you have that skill, even with AWS, you're a pretty high-value employee, kind of a high-value worker here. It's going to get easier to do these kind of things. And we'll talk a little bit about that as well with a PDF that I have from IEA that talks about what really are the major impacts and who is going to be impacted by these. Kind of a fascinating insight, and it's going to be different than how it was in the past, right? From, I'm working on boxes, and now I'm moving because that factory got automated and so on. This is going to hit really highly educated, high-paying workers in a major way, and it actually might kind of skirt over the lower-paid, kind of lower-skill workers in some capacity. We'll talk a little bit about that. One of the interesting things with ChatGPT is Microsoft's really integrating this in a massive way. If you look on your keyboards, if you have like Windows keyboard, essentially, you'll see in the bottom left screen, bottom left portion of the keyboard, a little Windows icon, right? And that Windows icon allows you just to pull up everything. It's like the directory for your computer. That's about to be replaced, I think, in some HP models with just a straight ChatGPT button. Okay, so again, it's getting easier to do these things. In the past, with computers, you had to learn command prompt, and you had to understand how to, navigate directories that way. Then they made it all visual to an extent with UI, and now you're not even going to need to know really how to find things with this ChatGPT. I mean, this is drastically changing how things work. Additionally, I believe VW is putting ChatGPT into their cars as well. Mercedes is competing in a way, and they're putting a just interface AI into the car. So you just press it like, hey, Mercedes, I need this, turn the air this way, so on and so forth. ChatGPT is obviously far more advanced than something like what Mercedes is going to put in. I think they're owned by the same people, but for some reason VW is just kind of getting ChatGPT while Mercedes kind of gets a more mild one, right? Let's take a look here. I want to pull up, gotta find the download. Give me 1 second here, sorry guys. Okay. I'm going to move this over here. We're going to talk a little bit about how this AI can potentially affect really high-skilled workers. Okay, so this is from the IMF. All right, this is a way that they've tried to essentially quantify how people are going to be impacted in all different job roles. And I want to pull out how they're kind of doing this. Just one moment. I had the PDF up, but for some reason it crashed on this. Okay, so the way that they're kind of quantifying all this, right? They're going to go through it this way. It's communication, so this is face-to-face public speaking. As AI tools continue to evolve, they will undoubtedly enhance various aspects of communication. Okay, the idea is like what certain jobs have exposure to essentially these 6 components, right? Because they're seeing that generative AI, things like ChatGPT, are doing such a good job. I mean, so much so that they're even fooling people, right? We've seen a lot of kind of scams and, hackings be achieved essentially using AI, right? You're getting a phone call. It sounds like it's one of your family members asking for money, and you end up sending $2,000, so on and so forth, right? So, I mean, we're really seeing kind of what automation wasn't able to do in the past. It's now getting there. They have responsibilities, so responsibility for outcomes, physical conditions, exposure to outdoor environments, okay, physical proximity to others. Of course, this is going to be something that generative AI is going to have a bit of an issue with because they don't have at least a built-in way to interface with the natural world currently, but companies like Boston Dynamics are changing that. Criticality, so that's consequence of errors, routine, and then skills and job zones. We'll talk a little bit about that when we get back. Folks, stay right there.
Are you ready to take your trading to the next level? Introducing Tom O'Brien's award-winning newsletter, Market Insights, your key to successful active trading. Tom O'Brien, renowned for his expertise in the financial markets, has designed Market Insights to be your daily guide to profitable trades. Tom publishes his daily Market Insights newsletter every market day before the market open, along with updates when warranted. Stay ahead of the game with Tom's real-time analysis and trade recommendations delivered straight to your inbox. Whether you're a seasoned trader or just starting out, Market Insights provides the edge you need to navigate the markets with confidence. Ready to join the ranks of successful traders? Head over to TFNN.com and subscribe to Market Insights today. Don't miss out on this opportunity to supercharge your trading results. Market Insights comes with a 30-day money-back guarantee for all new subscribers, so you have nothing to risk. Don't miss out on this opportunity to revolutionize your trading game. Head over to TFNN.com right now to join the thousands of traders who have already experienced the power of Tom O'Brien's award-winning newsletter, Market Insights, firsthand. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. This is Jacob Shoup filling in for Tom O'Brien. Before we went to the break, I know we only have a short segment here, sadly. But essentially, this is a document released by the International Monetary Fund, kind of trying to quantify the impact that this new generative AI may have, right? So let's take a look here. Again, these six were communication, responsibility, physical conditions, criticality, routine, and skills. And it's interesting because in the past with automation, right, that everyone's, I hear this comment a lot. It's like, well, it'll just be the same thing as it was in past revolutions. And it's like, yes, you're going to have job and worker displacement, but I do think, again, that the people who were in the past secure from those kind of things, right, like very high educated, high trained, niche job kind of deals, they were kind of immune and they didn't have to care about it. But now we're seeing that this isn't the case anymore. And in fact, it's very funny how physical conditions, depending on how physical your job is, actually does kind of secure you from the impacts that generative AI will have on employment. Okay, so let's take a look here. I'm going to try to do this. I don't know how well this is going to work on this computer. Okay, I don't even know where that's going. All right, this is the kind of quadrant we have. We have low exposure, high complementary, high exposure, high complementary, high exposure, low complementary, and low exposure, low complementary. And we can take a look here. I'm going to try to do this the best that I can for all of us. So we can kind of take a look at it side by side. And so it's very interesting, right? So you have, let's say in the past, again, like manual labor people were the ones who were kind of getting kicked out with a lot of automation. You saw that in factories. You're seeing here one of the I guess professions, I would say, or jobs that has the least exposure and kind of has the least chances of kind of being kicked out of this revolution. Should be something like dishwashers, right? You have things like telemarketers, which have very high exposure and low complementary, right? So the issue with that is you're kind of just most likely going to lose your job with something like that. I don't know. Anyways, I find this super interesting. If you want the PDF, you can email me at jacob@tfnn.com. I can send it to you. Of course, I didn't get to go over everything I wanted to in it. But folks, thank you so much for joining me. Tom O'Brien will be back tomorrow. We have Tommy O'Brien at 9 a.m. Then we have Basil, Steve, Larry, and then Tom will take you home. Thank you very much.